Here we go.
I've absolutely no idea what to expect, but I've got a broking tool in front of me just in case. I'll get a mortgage calculator up as well.
Cool. Yeah. I have no idea what I'm even going to ask you yet.
Even better.
I never do any planning. 1 second. Let's see if we can get this. Right. So my phone is positioned.
What do you use your phone for?
Just to monitor the YouTube comments. This is being streamed to YouTube as well. So, and I'm using a different internet on my phone because my internet here is just really doing my head in.
Can you not get the commercial one? Apparently, there's a commercial internet that you can get put in, which is a straight commercial line, 40 quid a month.
Yeah, I think it was FTTC line or was it FT? I can't remember, but yeah, I tried to do it, and so normally it's because there's a grant. There's like an internet grant where it'll cover up to the first 2.5 grand, but because of the weird place where we're living, it was an extra it's basically the total works came to about 5.5 grand. So the grant would only cover 2.5 grand, and then I'd have to pay the other remaining. And it was something like a multi-year contract. But the thing is, I'm renting here at the moment. So
you only paid 5 grand to install them, and it makes sense.
And then whatever the cost, but I've got Starlink, and it will get better. It's in beta phase at the moment, which means it's like proper testing phase, and so the download speeds are like I'm touching between 200 and 400 meg download, which is great. But it's great. However, it's because it's beta, it keeps cutting out. So if I hold a Zoom call on Starlink, I'll just keep cutting out probably every 15 minutes.
It keeps dropping. Basically keeps dropping. What is the upload speed? So download's one thing. It's the upload.
Upload is at the moment about 30.
That's not bad.
Yeah, it's not bad, and it's
beta. That's better than BT. I think I got like 50 download and about 20 up if I'm lucky, 15 to 20, and that's the best one they can offer at the moment. So
yeah, but once it gets out of beta within the next 18 months, we should be hitting Elon said anywhere between 1 to 10 gig download, which is just nuts. And I'm not sure about upload, so it's just a matter of time.
Yeah.
Right, we got 1 minute to roll, and ironically, or not ironically, just people start to roll in. So let's chat bullshit and for the first 5 minutes or so, and then more people will be here.
If there's one person there, it's good. That's fine.
Yeah. Cool. So that's 12 o'clock. Hey everyone. So we've got the 9 people on YouTube. Hey YouTubers. And what have we got? We've got 13 on Zoom here at the moment, but yeah, numbers will come up. Good to see you, Fame. Right. As always, please pop your comments, your questions in the chat boxes, in the Zoom ones, and also YouTube. I will be prioritizing on the Zoom questions. And today we have an interesting guest, and I've known him for a number of years now, probably, I don't know, getting near on a decade, probably.
It is almost a decade now, yeah.
Maybe, something like that.
Next year's a decade.
Wow. That's crazy. So I met Justin when I started my business life. So
backflipping down an aisle, I remember.
Yeah, so
no
like I think around 2012, 2013, I started getting into business, and I didn't have a clue what I was doing. And all I knew was that I needed customers. And I found that apparently there was some business networking events in Norwich. So I thought, let's do it. And I joined BNI, Business Networking International, and I hated it. But I did it for 3 years, even though I hated every second of it. Simply because every Thursday you'd have to arrive at like 6:15 in the morning. And it was just like, and I'm not a morning person. I loathe getting up early. So like today, I just got up at a casual 10:30, pretty chilled. It was awesome. But yeah, so anyway, I did that for 3 years because it does work. When you're a small business owner, doing things like before networking and BNI, it does work up to a certain level, but then it does hold you back.
Do agree with that. I think getting your feet under the table, getting the initial wheels in motion, it's definitely got its place. It's definitely got its place. And making contacts, we knew nobody when we came up to Norfolk. Between the golf course and BNI, we actually now know half Norfolk, so it did what it needed to do.
Yeah. So one of the silver linings from BNI was that I met Justin. So Justin was the mortgage guy, and we stayed friends ever since. I steal his money from poker nights every now and then.
Prize two.
But yeah, so basically, as you all know, I'm renting. I do not want to buy a house. I'm trying to delay that trigger as long as I can. However, Ellie is really pushing me to buy a house at the moment. And when I do, I will 100% go through Justin. And I must have pushed loads of people Justin's way. And I have no commercial affiliation. So I make no money by recommending Justin at all. I'm doing it literally because genuine people need good, more airtime, so to speak. So Justin is one of those blokes. And the promising thing the cool thing I've found is that I've recommended people to Justin and he didn't even know about it, just simply because I forgot to give him a heads up or whatever. He'd have meetings with him, etc. And there's been quite a few people, I can't remember the names off the top of my head, but it's probably at least 5 or 10 people that said, "Oh, thanks for passing me to Justin, had a good chat. He can't help me because of this, blah, blah, blah." And but yeah, it's really good. And so the cool thing I like is that Justin will literally probe you.
Easy. I'll ask the relevant questions to establish whether we can help them.
Yeah, there we go. He'll interrogate your circumstances, so he knows everything. So he knows what your situation is, and then he'll literally give you an honest answer if he can help, can't help, what's the best solution, yada yada yada. So yeah, Justin, thanks for being here, mate.
Pleasure. Thanks for having me on. Appreciate that.
Chris says, does probing cost extra?
Only if you ask me nicely.
Yeah.
That's normally what I do when I'm playing poker.
Yeah. So today I'm going to do something a little bit different, if you don't mind. So I've watched a lot of podcasts and interviews and stuff like that. And I've always wondered why they always go through who are you, why are you here, etc. first. And I look at everything from a UI or user experience, UX perspective, like when you're reading a book, etc. And with them is the thing that goes around our head all of the time. What's in it for me, or why do I care? And what I've noticed in every interview on YouTube is that they talk about your life history, yada yada yada. But at that point, like, no one gives a shit. So it literally, no one knows who you are, no one knows who I am, maybe. And no one actually cares. So everyone is always thinking about, why do I care? What's in it for me? So I'm going to try and do something a bit different. How about we get into the nitty gritty and get all the juicy nuggets out of you? And by then, people will be like, Jesus, Justin is this awesome bloke. Who the hell is he? And then we'll talk about your background. Does that make sense?
Works for me. Far away. There's nothing you're going to scare me with, so go for it.
Sweet. So...
just by the way, I have no idea what he's going to ask, who's going to ask, what they're going to ask. I've prepared nothing. So it is literally floor's your guys' answer, or fire away whatever you want to fire away.
Sweet. Me too. I have no idea what I'm about to ask you. Winging this as we go. Right. I'm going to pretend. Well, I don't have to do much pretending. I'm going to pretend that I know nothing about mortgages or houses, etc. And I'm going to just ask you pretty much anything. So... are you a residential property person or commercial? So do you do resi or property or commercial mortgages?
Okay, so I specialize in residential. Okay, but that could be buying a residential house, buying a residential property for a buy-to-let basis, or if you're looking to buy property in limited company SPVs. So this is effectively a lot of people now migrating over to setting up a limited company specifically to hold property, and effectively it's going to be the buy-to-let property that way. It's more for tax reasons, tax benefits, and that sort of stuff. So where you would normally go buy a residential house, now buy my next property as an investment, in your normal personal name, what people are now doing is setting up a separate limited company and going, I'm now going to buy through my limited company. So I can deal with all of those. Within our network, I've been doing this 20 odd years. Within our network, we've got guys who specialize in commercial, so secured loans, commercial, bridging finance, that sort of stuff. So I generally say if it involves property or finance relating to property, give us a shout. If I don't do it personally, I know trusted people who can.
So nice. And are people going through limited companies now simply because of clause 24?
Because of the tax changes in the buy-to-lets. Yeah. So I'm going to be careful. I don't give tax advice, so I've got to be careful of that. But just as a generic background for it, when you had buy-to-let properties, you used to be able to offset 100% of your rental income against mortgage payments and running costs and stuff like that, regardless of tax banding. Because of the new tax laws that have come in, they've actually ratcheted that down to low rate tax banding. So if you are currently a low rate tax banding, probably unaffected. If you're a high rate tax banding, you'd actually lose. So it'll actually cost you more in tax, basically. So what they're trying to do now is to put it inside limited companies and try and ethically offset tax where possible.
Is it an LTD or an SPV that they're putting the property?
It's SPV. So no, so you would set up a limited company SPV. So it is a limited company, but it is an SPV. So it's got certain SIC codes that you have to set up to specifically hold property. So you wouldn't be able to say, for instance, to RT, you go, I'm just going to buy a bunch of properties unless you have the correct SIC codes. So you would just set up RT Property Finance Limited, which is an SPV, and then just whack all your properties into that.
But RT, as in my company, so RT would then set up the SPV, so it would still be within the RT group, so to speak.
I'm going to say that's an accounting question.
Okay.
I'm good. I'm not that good. Gracious. The way I understand it, people are literally just setting up another limited company alongside. You can do intercompany transfers. So if RT had £1 million and wanted to drop it into property, you're doing intercompany loan to RT Property and then buy your properties that way. Some lenders don't like it. Some lenders are absolutely fine with it. As long as your accountant shows the paper trails backwards and forwards between the companies, you should be okay. But that's the accountant's confirm.
Okay. And if someone wanted to buy a commercial property or any property through their SaaS, do you help with that as well? Or
okay, so I don't offer the advice or anything like that. So if it's commercial, we use the commercial guys. They'll set up the finance from that, and it's between them and the accountant to sort that out. I don't get involved in any of that.
Cool. Okay.
So I'm working with a company who's looking to buy their commercial property that they're currently renting, and they are going to be doing it through their SIP. So they'll literally just take the money from the SIP. There is a certain permutations and that sort of stuff that they'll use, and effectively the pension will buy the commercial property for them and it'll be held within the pension itself. But I don't get involved too much in that. I'll just put you in touch with the right guy who can organise the finance for that.
Okay, cool. Alex, I'm not sure what your surname is. I know quite a lot of Alexes, but Alex has asked, is there a minimum income requirement for buying a buy-to-let property through a limited company? Or can you secure a mortgage just looking at the rental income being 145% of mortgage payments?
Okay.
So let's look at, there's two questions. Let's look at the first one first.
Yeah. So first one first, a lot of lenders will have a minimum income requirement, whether you're buying it through your personal name or potentially through the limited company. The idea behind having a minimum income is to say that if there is a rental void, have you got the ability to cover that? So it could be minimum income or could be having minimum savings in the background. Generally, it's 25,000, potentially up to 30. Once you own your first property, you could be classed as a professional landlord, in which case they may say, as long as you've got an income coming in, then there's no minimum income requirement at that point. So if you work on the basis of 25 grand as a minimum, you're not going to be far off the mark. As soon as you become a professional landlord, there might be other options available as well. Or secure a mortgage just through the 145. Each lender has got its own way of working out affordability. So the general rule is 25% deposit. So buy property for 100 grand, 25% deposit, 75 grand mortgage required. The rental income then needs to justify the mortgage that's going to be outstanding. Okay, so you've actually got two calculations you have to run side by side. And then it's just if that fits, and the rest of the criteria is just dependent on the client itself. So 25% deposit and rental income needs to cover the rest. The 145 is just one of the permutations. There is, if you go for 5-year rates, you could potentially go as low as 125 at pay rates. If you're a limited company SPV with multiple properties, you could be up at 145 at potentially 6%. So it depends on the lenders and their permutation. So,
okay, so let's bring back to basic English talk. Property and tax is like the two little gaps in my head. So, okay, 100K property, 25 grand deposit. And you said the rental income has to cover the 75K.
Correct.
Over what period?
No, it's on interest only. So there's a calculation that they'll do. So if you said, say, for instance, I'm going to get a calculator up. Give me 30 seconds.
Do you want me to let you share your screen or not?
I'll tell you what I'll do. You can do.
Shall I share the screen on your iPad or your other Justin Fordham?
No, can you see the Excel, the Excel screen, the Excel, hold on. Can you see that one?
Oh, no, I have to make one of you.
Oh, sorry, yes, the desktop. Do the one with my
desktop
static face.
One second. Make co-host. Yeah, you can now share your screen.
Okay, cool. Right, share screen. That's on after that. Right, can you see that?
Visual.
Can you see the calculator? Yeah.
Oh yeah.
Right. So you using the 100 grand property, 75 grand mortgage. If you said that you can only have a £500 rental income coming in, the standard rate that we'd normally default to would be 5.5%. And then you're looking there. So there's 145 that they mentioned. So you'd only be able to lend up to 75,000 based on that. And then depending on the lender and depending on the rate we use, you'd ratchet down from 145, 140, 130, 125. So being silly, say you only had a 300 rental from the property, you'd see that we'd only be able to lend 45 at that basis. Yeah. So there is a lot of science that goes behind it. But does that answer the question a little bit? So there's a lot of different variations, permutations. So part of the stuff that I would do is you'd say property value is 100, 25 grand deposit, 25%, perfect. So you got 2 ticks in the box there. Your income's okay, so that's a tick in the box. The last piece of the puzzle is how much rent you get for the property. I would then throw to the calculator and then compare this to the lender's criteria to make sure it fits. So £300, I'd say, sign, go find another property. If you said 500, I'd say we've got a good chance of getting you the 75 mortgage because it fits a multiple of the calculations.
Yeah. Oh, okay.
That make sense?
Yeah. Yeah. Perfect.
Right. Let me stop sharing screen. So you should have.
So nice. So Johnny has then said, Johnny Peters, does the 5% deposit option now entitle you to buy doer uppers instead of brand new properties? And can that be remortgaged once renovation is complete?
Okay, so the government scheme is, so technically yes, because it used to be only on new build properties. They're now opening up, I think it's at the end of the month, they're now opening it up to second-hand properties. So yeah, just be careful with the whole 5% thing. It's almost a little bit of a hot potato or can be misinterpreted. The mortgages themselves, yes, you can get a 5% mortgage, okay? The rates are going to be horrible, okay? Criteria is quite stiff to get into them. And as you go down the loan to value banding, you go from 5% to say 10%, the deals get slightly better, more lenders work in that space. 15%, more lenders, better deals, 25 and so forth. So the bigger your deposit, the better the rates and the more options we're going to have for that. Technically, yes, you could buy a property with a 5% deposit, regardless of whether it needs renovations or not. As long as it is habitable, okay, and the valuer says, yes, you can physically live in the property. It can be an absolute pigsty, but as long as it's got running water and you can cook, technically you're going to be fine. And then yes, you can renovate it to your heart's content, and then yes, remortgage and sell or remortgage and release equity.
Okay, so Johnny, do you have skills in that area in terms of doing up it? Like, are you good with your hands, so to speak? Like, is this something that you do at the moment? In fact, whilst you answer that, I'll move on to the next question. So Amanda said, can we get your advice on mortgages if we live anywhere in the country? Yes.
So I'm not geographically restricted. So this whole, when we went into COVID and they said we're now in lockdown, to me it was like great, business as usual. Nothing actually changed. Yeah. So when I went, been in the industry 20 years, when I went self-employed back in 2007, I said I'm never going to see a client face-to-face again. Purely from a time, it's a business decision, because if I'm driving an hour to come out and see 𝗁𝗂, okay, spend an hour with you and then drive an hour back, that's 3 hours out of my day. I could probably do 3 phone calls to 3 clients in the same time. So I said, fine, I'm going full remote. So everything is internet, telephone, and so forth. So yeah, I'm not geographically restricted. I've got clients literally from the furthest northern parts of Scotland down to Cornwall, Devon. I do a lot of international clients, so that is extremely difficult and testing. and especially with the new EU rules and passport rules and stuff like that. So I do work with a lot of expat stuff as well, super complicated. But if you're saying UK based for this community, yeah, no issues where you are. Just call me up, send me an email, I can work with you.
Okay, so when you said there's better deals with when you basically have a better loan to value, like how much better are they? So if you went down the 10% deposit route, like which is pretty standard, let's say it's I don't know, like a 300 grand house.
Can I do a screen share?
Oh yeah,
you can talk and I can actually show you what happens. I can do a live demonstration in live markets.
I like numbers.
Screen share. Right, just give me a thumbs up if you can see that.
Yep.
Okay.
Yep.
So this is just a basic software that we use. So this is not advice to anybody. This just shows you what happens. Simon, throw out an example for me. So buy 300. Okay.
Yeah, it's just I have a friend who said the sweet juicy deals around when you have a 40% deposit, and I was just curious.
Anything sub 65% is juicy. So what I'll do is if I show you, I'm just going to do a very standard purchase. So Simon's a first time buyer, 300 grand purchase, and he's going to put a 5% deposit down. Forget about income criteria and that sort of stuff. Yeah. Okay. If I just do a quick search for you, okay, I'm going to simplify this and just go fixed rates and just go, say 2 years. Just keep it very, very simple for us.
Okay.
And you'll see how the rates start dropping. So you can see over here. So the first one you'd be looking at there is probably something around about 3.7. Okay, with something like Halifax. Okay.
Now, and so that's the interest rate on the total loan.
That's the interest rate that you'd pay. So that's the 2-year fixed rate at 3.73%. So your mortgage payments on that would be, say, 1462.
Okay, cool.
Okay. So after 2 years or at the end of the product term, so that'll be June 23, the deal would expire. We then look to remortgage onto another product. Okay.
Okay.
But just to show you what happens with the loan to value. So you're looking at 3.73. What I'm going to do is I'm going to drop that down to 90% for you. Okay, so we're now down to different lender, albeit at 2.89.
Okay.
Okay, 1264. If we drop that to 85, okay, you can't use the retention. So 2.39, so 1129.
Okay.
Yeah. Now, obviously, the monthly payments, you're obviously borrowing less. Of course, the monthly payment's going to go down, but it's the interest rate. You can see how the interest rate starts changing. If you then drop to 75, so this is where they really start looking attractive. Okay, so we now got rates starting at say 1.19.
Okay.
So there's a huge gap at the moment. I think it's because of the conservativeness because of COVID, lenders being a bit scared and stuff like that. Yeah. Anything over 85%, they super cautious. So they're priced per risk on that basis. There's a couple of lenders who have now introduced a new tier, which is basically 85 to 80 and 80 to 75. So as soon as you drop below 80%, the rates are okay. But as soon as you get to 75, then they become super attractive again.
So aim for a 25% deposit.
I say
the best deals, for better deals.
No, the bigger your deposit, the better it's going to be. I think each person is quite unique. So people ask me, are things like shared ownership helped buyers really good? Or do you buy in your own name? It is horses for courses. Some people, it is a case of I've only got 10%. Okay. Yeah. If you've only got 5%, I'll probably go, can we wait 6 months or 12 months, try to get that extra 5%. The reason why I don't like exceeding the 90% banding is it's not that I can't get your mortgage now, but I'm always looking at one ahead of you. So I'm doing your mortgage now for 𝑠IAM, but I'm also looking at your remortgage in 2 years' time as I'm talking to you now. If we only do a 5% deposit, unless the property values increase enough or you pay enough off your mortgage to get you below 90%, the number of remortgage deals are quite limited. So I'm almost backing you into a corner going, okay, for the next 2, 3, 4, 5, 6 years, you could be quite tight. By doing it at 90%, you've now got quite a lot of remortgage options available. So I'm not handcuffing you to the market. So I'm always looking at these things as the next remortgage and the mortgage after, just to see where you'll end up. And then sometimes I might say, 𝑠IAM, can you just hold fire? I get a bigger deposit because of. Sometimes it is a case of you're a solicitor, your salary's about to quadruple in the next 2 or 3 years. You're going to be able to overpay bucket loads of money, whatever the case is, then great, let's do a 95% mortgage because you've got the capacity to get yourself back into the better side of the market. So.
Okay. And so let's say you're going to put, say, a 10% deposit down on something. How much borrowing can you do? It's percentage of your, is it a multiple of your income, isn't it?
No, it used to be. So
When did that change?
It used to be a case of 3 times salary, 4 times salary, 5 times salary, and so forth. Lenders from 2007 to 2010, because of the credit crunch, what they've now introduced is affordability multiples. So each person will be slightly different. So the way that I tend to work is on a green, amber, and red basis. So green is call it 3.5 to 4 times income. Amber is up to 4.2, and then red is up to 4.49. What I do while I'm working with my clients, I would say, if we can keep within the green banding, we know we've got most of the lenders will consider with affordability. Lots of deals, lots of options. Move up to amber, slightly less lenders, but they'll lend you a fraction more. Go into the red list, and there's only going to be a couple of lenders will lend to you, albeit price per risk as well, because they are obviously maxing out. If you have 2 clients, so for instance, husband, wife, but these guys got children on identical salaries and outgoings, chances are the people without children will lend a fraction more than people with maybe young kids, because then you've got maybe school fees and childcare and stuff like that need to be factored in. So there is no black and white anymore. It's all based on affordability. But the way that I've helped my clients with that is by using the green, amber, and red basis while I'm working with them. It's also based on affordability. There's one other thing I need to include with that. Just because somebody can lend you 4 times your salary doesn't mean that's what you should be borrowing. And I think that's where a lot of people tend to go wrong. They'll go to the bank and go, and 50 grand a year, great, you can borrow 200,000 pounds. It may be that you don't want to borrow that or need to borrow that. The way that I tend to work my affordability is actually based on the balance between beautiful home and lifestyle. So do you want to work 60 hours a week and borrow the 4 times your salary, or would you rather borrow slightly less and get a beautiful home, but also have a beautiful lifestyle? And it's getting that balance right. I think if you go to most banks, they try and whack you up for as much as they can possibly get. People go out and put a noose around their neck and go, I now need to work 60 hours a week to pay my mortgage payments. So I work slightly differently, but that's the 15 years working alongside a charity, helping people with financial difficulties. And I go, here's your snapshot. This is what you look like if you max out. But if we trim it back, there's your lifestyle, there's your house. And we try and find the balance between the two. Does that make sense?
Yeah. And so so if you're a business owner, you're most likely your income is going to be all over the place. It's either going to be something like tiny income and the rest in divvies, or like what figure do you look at in terms of the income? Is it the actual income take home or the salary?
Good question. Okay, so one of the areas I specialize in is self-employed. You know that. I mean, if it's self-employed, I'm all over it. So, I mean, multiple own companies, born and raised in a family of self-employed, brother's a chartered accountant. So I eat, live and breathe self-employed. There is, each lender's got different ways of looking at income. So they may use salary and dividends. Okay, they may use salary and share of profit. Okay, if you're sole trader, it would be your once you take all your costs and fees out, it affects your net profit. So it's slightly different for sole traders to limited companies. So you don't use your turnover, because you could turn over £1 million a year, but if you only have a £10,000 profit, effectively that's what you'll be using to take as a dividend. So you'd only use your 10 grand at that point.
Yeah.
But it also changes it if you're a less than 20% shareholder. Okay, say for instance you only own say 2 or 3% of a large company, they may pay you as a salary and a dividend at that point, and it's what proportion they'll use of that. So there's not one clear-cut way of doing it. It's a case of, 𝑖'M, who are you? What is your profile? Okay, how do we need to present it to the lender to make sure it fits? Yeah.
Okay.
And it's also whether they'll use your latest year or average of the last 2. And whether your salary is going that way or that way, it depends on which way they'll look at it. It's an absolute minefield, but it's awesome. That's what gets me out of bed is working this all out.
Blimey. Okay, so got some other questions here. Right, 𝗪𝗲𝗹𝗶𝗶, I'm so sorry if I've said your name wrong. First-time home buyer, but not a UK citizen. Would there be any issues with obtaining help to buy?
Oh, genuinely can't answer that. I actually can't answer that one. I think that's a question directly for the Help to Buy If buying in a sole name or buying with somebody else. Okay.
Buying in a sole name.
Buying in a sole name. I think you may need to speak directly with the Help to Buy people to see if you qualify for it. I genuinely can't answer the question. If you did get or you did qualify for the Help to Buy, you'd be no different to getting a normal mortgage for a normal British person. The only thing we need to be careful of is if you're on, or what type of visa you're on, or what type of passport you're on, and whether or not we need to, whether you fit the passport rules, for instance. So have you got indefinite rights to reside and stuff like that? If you do, then the mortgage itself is going to be fine. It's just whether you qualify for Help to Buy.
Okay, thank you for that.
And just so I know for the future, how do I pronounce your name?
It's Sarah.
Oh, Sarah. Oh, cool.
Yeah.
Sorry.
Thanks, Sam.
Hopefully that helps.
Cool. Johnny then followed up with his previous question. Yeah, I trained on some property courses, learning about the different strangles, and currently working with my brothers on a buy refurb finance property in Norwich, taking ages though. Cool.
Okay.
Cool. Tom said, "Hi Justin, is this personal or also for limited company?" Oh, I think you said both, didn't you?
For what? Referring to what? Tom, let me just go back to his initial question.
Oh, the interest rates. Regarding interest rates.
Okay, yeah. So it's interest rate. It's regardless whether you're limited company, personal. It all works on loan to values. So the lower the loan to value, the cheaper the rate's going to be, and the more lenders working in the space.
And so let's say you're looking at. Is there are there different sweet spots in different prices of houses? So let's say that, like, if you're looking at a house for, say, £1 million, is there an ideal deposit that you need to stump up?
You could buy £100,000 property, £1 million property. It's still down to the loan to values. You may fall into the high net worth category, so the deal may be underwritten slightly differently, maybe a bit quicker, but the actual deals themselves, absolutely irrelevant. Where you're going to see differences in interest rates, if you did a residential purchase, the rates are going to be reflective of that. If you then move into the buy-to-let sphere, your rates will be slightly higher because it is an investment property, it's not your primary residence. And then when you go into the limited company, like the SPV, so buying in limited companies, again, you'll see the rates go up slightly and probably the arrangement fees go up slightly because you've got all the tax benefits and all the rest of it. And I think, personally, if I'm allowed to say personal opinion, I think they slightly profiteering from people going down the SPV route because they know they've got all the tax benefits and stuff like that. So they've kind of gone, okay, well, we'll make another couple of pips on the interest rates as well and arrangement fees. So yeah, I can't say I agree with it. Hopefully it'll eventually come back in line with traditional buy-to-lets, but yeah, but that's the only thing is the difference there.
Okay, so let's say, because I know a couple in this position, let's say you're a director of a profitable company, but you're a director that hasn't taken any income. Let's say you're only taking home, I don't know, £2,000 a month. Okay, and you've been taking home £2,000 a month for the last 10 years. It's been flat. However, you're the director of a business, and that business is making hundreds of thousands of pounds profits per year. Let's say £1 million profit per year.
Yeah.
So if you then went down the personal mortgage route, that director would then be screwed.
No.
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 So
but if you go to
you just do it by the profitability of the business.
So you'd be share of profit within the business. So you do get people who just don't need to draw the funds out. So if you only need £2,000 a month, why are you drawing it out and paying the taxes? So we would just go to a lender who would use a salary and share of profit opposed to your salary and dividends. So that's where we'd use a different lender for different reasons.
What do you mean by share of profits?
So if you were, say, 50-50, you and I owned a business 50-50, £1 million profit in the business, we can only use 50% of the profit for you because you only own 50% of the business itself. Yeah, so we can, if you're like a 33% shareholder, we'd use 33% of the £1 million profit.
So if I had a business which was making £1 million a year profit, I was 100% shareholder, but I was only, let's say I was only taking home £1,000 a month.
No problems.
So you would go based on the £1 million. So would it be a multiple of the £1 million?
It would be your salary and the £1 million. So it'd be salary and share of profit.
And would it be a multiple? So in terms of how much you can borrow, would it be a multiple of that profit?
Technically, yes. It's an affordability based multiple, yes.
Okay.
So you could lend 3 or 4 million based on that scenario.
Okay. And so this is for a personal purchase then. The business wouldn't be buying that property.
Well, no, if the business is buying property, it's completely different. So you're talking about two completely different transactions there. So if the business wanted to buy a property, they'd have to have the relevant SIC codes, or set up a separate business and pump the £1 million into that business, then buy it as an SPV. If it's your personal residence, you'd use your salary and dividends or salary and share profit. Those two completely separate transactions.
So if you did have a profitable business, and let's say your personal credit rating was dog shit, etc., could you then set up another SPV? You know, so let's say your profitable business is here. That business then sets up an SPV. It somehow gets the money over here. This then buys the property. So the company now owns this property. But then could the director then just rent from be a renter? But obviously that person is indirectly.
Okay, that's getting quite technical. If it was a commercial property, the bank would know that you're buying the property to rent it to yourself. So the profitable business would be renting there. So technically possible, but that's more along the commercial lines than the residential lines. But technically, yes, it could be possible as long as they're aware of what you're doing. So, for instance, an accountant wants to buy the property that they're currently renting. They want to buy it within their SIP, for instance. Okay. The bank knows that the accountant is the one currently renting that property. So although they're buying it in their SIP, they know that they're still renting it. So as long as the lender's aware, it should be possible. But that's more commercial based than residential.
But what if the property was a residential property? Would it still be classed as a commercial deal?
Sugar. But then the business, okay. The way that I'd circumvent that, if you were a client asking me that question, I would take the details and go start phoning up the lenders. I can't answer that one off the top of my head.
Cool.
I'm good. I'm not that good, but I'd ask the question. So all we do in that case is going. So you're basically saying that the profitable business is looking to buy a property, be it in an SPV, but you as the director want to now rent said property. Yeah. I would need to ask that. I need to probably speak to a couple of lenders. Because that could be classed as potentially regulated because you're the director of the business, so you PG the mortgage, but then potentially also renting it. As long as it's not, because one thing you can't do is you can't buy a buy-to-let and live in it. Okay, so that's illegal. Okay, and that's what some people try and do is go, I can't afford it because I don't earn enough, but I fit the buy-to-let criteria, so we'll go and buy a buy-to-let, and then basically I'll live in the property and just pay the rent. Okay, but that is actually illegal. So
illegal? Why is that illegal? I don't get it. You're not doing anything dodgy.
It's because people are basically going out buying properties they can't afford. Because the criteria is very, very different. So effectively, if you buy you could buy, if you've got a 25% deposit, you could potentially go out and buy, say, £100,000 property, as long as you fit the rental and all that sort of stuff. So the rent may only be £300 a month, £400 a month. But for you to physically go out and buy it on a residential basis, you may need to earn 50 grand a year. Being very stupid, you may not earn 50 grand a year, therefore you can't do it on a residential basis.
Okay.
But there is
like a
ways
protection
that you can do
measure.
that. Yeah, I know two colleagues in the 20 years I've been in the industry, they've lost their licenses because they were doing that for family. Family couldn't afford to move to the next scale up in the property ladder. Don't worry, we'll do it as a buy-to-let, and they got caught out and they lost the licenses. So they closed the business down. Yeah, it's illegal. So the one that you've explained now with the business, I would need to disclose it to the lender and say, does this class as a buy-to-let renting itself back to you, or is because it's by the business, is this okay? And as long as they give you a thumbs up, then yeah, if it's legal and possible, it's 100%.
Because the reason I was thinking of that is because if the property was owned by the SPV or the business, any maintenance that needed doing, it would the business would have to would pay for it, and therefore it wouldn't come out of your personal pocket to do fix the roof or fix the boiler, etc. So,
but that's just offsetting. So it's whether you rent it to yourself, you rent it to Joe Blog, you'll still be able to do that regardless. That's just general maintenance.
Yeah.
Just you need to check with your accountant how much of that you can offset. Anyway.
Okay. So. Okay, let's move away from the financial engineering.
Chris has posted a question here. Hi, Justin. Is it true that if you've taken more than one 𝐶𝑠 grant, you're going to struggle to get a mortgage?
Where have you seen that question?
1221.
Sorry.
Chris.
Yeah.
So, Chris, to answer your question there, sir, I called what was happening in the market back in March when COVID hit. I said exactly what was going to happen, called it, and basically I've been right the whole way through. towards, I'd say, mid part of the year, I've been campaigning with a lot of lenders saying, what is your post-COVID criteria going to be once we come out? Because effectively, you've taken all these businesses and gone shut down, no income. When they look at your mortgage on a traditional basis, they're going to have to look at your last 2 or 3 years worth of accounts, and you're going to have perfect COVID blip, then back up to where you are now. In normal terms, they'd have to factor in the COVID year on how much they can lend you. And of course, if you haven't been trading or taking grants and stuff like that, it's a catastrophe. And I put a post out, I think it was last Friday, we've had our first lenders just put their hand up and said they've now got specific criteria for the COVID year. And the initial criteria, please don't quote me on this, it's all coming out as we speak, is they're looking to potentially use, say, 19 and 20s accounts, ignoring 21 being the COVID year, and then potentially back up to 2022. So to answer the question, is it going to be tough? Yes. Is it possible? Possibly, depending on how you're trading now. I managed to get a personal trainer a mortgage where they'd been shut and had all the grants, got back up and running after the first lockdown. As long as they were trading for 90 days, which they were, we effectively had classed them as pre-COVID criteria. And then, of course, we went into lockdown, they got locked down again. So if it's possible, I will find a way. But I'm going to say tentatively, I don't know the history, but tentatively, yes, it is still possible to get a mortgage.
Cool. Amanda said, is there any way to get a mortgage without income proof? I.e., could your savings or investments cover the part?
Okay. I'm going to be very careful now. If I'm looking to go out and buy my residential property, probably not. Okay. If you've got substantial savings, and you class as a very wealthy person, very high net worth, maybe. Okay. I have worked with somebody recently where they've got zero income but had a substantial amount of millions in the bank account, and we managed to do a buy-to-let, holiday-let type purchase for them based on the fact that they had X amount of money in the background. But then you're back to the buy-to-let criteria where they had a portfolio of properties and so forth. If it's a residential, I'm going to say no. Okay. If it's a buy-to-let, depending on your profile, very rare, but might be possible.
Okay.
Hopefully that answers that one.
Yeah. And Peter said, hi, Justin. Do you find that people who make or have made their money through buy-to-lets are generally insufferable assholes, or do I seem to encounter the bad ones? Sorry. I'm
trying to answer that with a straight face. I've worked with a lot of different people in my time. Some are glorious and some are not so glorious. Hopefully that one answers that one. No, I think each person's unique. I've worked with some very difficult people. So yeah, the thing is, I have to remain professional the whole way through, regardless. Yeah, I'm not going to dig any deeper.
Yeah, no, it's fine. Yeah, I think the easiest answer is that there are assholes in every industry.
Correct.
But yeah, so, and if you don't know who is the asshole, it's normally you. The assholes everywhere. So, okay, let's see on YouTube. What do we have on YouTube? Peanut butter jelly time says, hi guys. Do you broker any bridging loans for refurbs or development?
Yes, I can, but I don't do it personally. So that's where I go to my commercial guys. So I've got a commercial team that do all of that. So yeah, yes, I can.
Cool. Yellow LED butter. The names on YouTube always really funny. Yellow LED butter said, I hear people talk about lease options for primary residence. Seems like a great way of getting into a detached property that needs a refurb, but do these deals exist and how can you find them?
I'm going to say technically not. Because if you can't lease, all you're doing is you're renting a property going, I'd like to buy it. If you're buying my property and I said, I'll agree to let you buy it for 100 grand in 5 years time, that's just a personal agreement between us. The actual mortgage application and that sort of stuff is based on what is your purchase price and how much you're looking to put down as a deposit. So I don't know if that answers that question, but I think the actual lease option is more between the people who own the property and who wants to buy it than mortgages.
Yeah. It raises an interesting point though, because could you get yourself into the situation where you find a good house, you do a purchase lease option, but then let's say the 5 years, 7 years down the line, you go, cool, I want to exercise the option. I want to buy the house for you at the strike price. But then could you then get yourself in a scenario where you're like, oh shit, I can't actually get a mortgage for that house?
Possibly. But if property's gone up, down and sideways, absolutely. I'm going to go slightly off track on what you've just said there now. Because of all the COVID stuff and the delays with COVID, the whole thing about going to exchange of contracts, so tying yourself into a lease option and going, we're going to exchange now but complete in September, you've got this huge gap of time. So in your case, 7 years, in this case, maybe 3 or 4 months, where anything could happen. You could lose your job, go insolvent, be made furlough, whatever the case is. Now you don't qualify for your mortgage, leaving yourself exposed. So just a word of advice, everybody I'm working with at the moment is try and keep your exchange of completion as close as you can to avoid being made redundant. I actually had it happen to a client of mine last year. Thankfully, we managed to hold the deal together for her. She got a job quite quickly and we just had to transfer to a lender with the day one employment option. But yeah, just be very, very careful there. So yes, you could tie yourself in all sorts of knots. I don't know, I don't do lease or purchase options. Okay, I think that's more, like I said, between the two people buying and selling.
Yeah.
When it comes to the mortgage side of thing, it is, what are you asking for? As long as the property value's up okay and your income supports, job done.
So yeah, Johnny said lease options are awesome. I agree. I do like lease options. He said use the rent from the lease option as deposit for the property. Thing is, the money you're paying every month for the lease option stuff, how do you use that as deposit? Because that goes to the landlord.
Yeah, I've not actually worked on any lease purchases in my time. If it's just a purchase, though, you do your lease agreement, that's not. Yeah. And then you just go, right, we're buying a fixed amount. We just got to be careful. If you're buying it for under market value, you can't buy for under market value and then try and remortgage for true market value and stuff like that. So you've got to be a little bit careful with that. So, you know, buying a 100 grand property, but it's actually worth 300 because you tied them into the purchase option 3 years ago type stuff. So it's got to be very careful.
Yeah. So the reason in fact, let's before we move off from the lease option thing, so the other part of your question, yellow LED butter, was how do they exist? Yes, they do. And how can you find them? See, then it turns into a normal marketing exercise. So in fact, I'm going to share my screen now. Let's just get paint up. So I almost had so for example, sorry, I'm drawing on my pad of paper and wondering why it's not coming up on Microsoft Paint. Sorry, wrong pen. So one of the things I'm trying to do is find a house which we like, and I don't know, let's just call it 1.5 mil. And the thing is with the lease options, they're not a good deal for everyone. So it's a bit like mergers and acquisitions. So I find finding good purchase lease options on big expensive properties is very similar to trying to find a business to buy that meets your criteria. And when you're looking for this, I would expect sort of a 5% success rate. So maybe 1 in 20 may say yes, or no, actually 1 in 20 will probably be open-minded. Because I've approached a lot of people and some are interested, some aren't. We almost got one down. We almost actually successfully did a purchase lease option. And the reason being is that what I found, just because I have been diving into this, there are a lot of properties out there that are expensive, big mansions, etc., which they struggle to rent for whatever reason, and they can't sell it. So some of their problems is that they're struggling to rent it out properly because, the rent that they need really is like £5,000 a month. But let's say it's in Norfolk and you can't, off the top of my head, you can't really find any houses that are like you can't get that sort of rent in Norfolk. And they're also struggling to sell. So the higher end houses, I've from what I've spoken with contacts and friends, is that they're struggling. And so that you have these sometimes motivated sellers / renters where they can't sell the house and they can't get enough rent for the house, and they still got the upkeep of all the grounds and stuff like that. So it's a very niched sort of thing that we found. But in Norfolk, there tends to be more of these motivated homeowners than you think. And so the plan which I'm trying to do is find a nice house like this and go, hey, I'd like to do a 7-year lease option, or purchase lease option, and we'll have a good strike. And so the average investor, like property investor, probably says, probably thinks that house prices double every year or goes up 10% a year or whatever. And so what I want to do is be fair. So if it's 1.5 times 10%, so it's once, I don't know, I can't, let's just pick a random number. Let's just say, so I'd like to, basically rent the house from you for the next 7 years, but with an option to buy the house for, call it £2 million in 7 years' time. So that would be the strike price. But the thing is, when you have a purchase lease option, you effectively take ownership of the house and you can do whatever you want. You can improve it, you can grow it, you can do all sorts of stuff. But obviously it's between you and the landlord and whatever you put in that contract. But one of the goals would be is that if you were then going to do it up and whatever, hopefully, I mean, there's lots of variables here and ifs and buts and whatever. The house, yes, the house will hope to be worth more than £2 million in 7 years' time. But as Justin just said, you can't then remortgage it based on the previous price. You'd have to then mortgage it on the current price at the time.
You can't buy for under market value.
Yeah.
Or sorry, is it actually the other way around, Simon? You can't go, I'm buying it for 1.5. Now it's worth 2 million. You're going to try and remortgage for 2 million. So you can't buy it at the market value and try and remortgage day one on the higher value. Yeah.
So, but yeah, it's hard. It's just like buying a business. It is a marketing exercise. So whenever I buy a business, you literally end up like canvassing hundreds, if not, hundreds and hundreds of different businesses. You'll have dozens of conversations, dozens and dozens, and then you'll probably end up buying one. So yeah. But again, my hands up here. I'm not a property person at all. In fact, I probably shouldn't even be speaking about property because, but it's one of the things I'm looking for. Alex said, how much do you charge for brokering?
Okay. I typically charge £97 for stage one. And it ranges between £297 and £497 for stage two. So stage one is somebody calling me up saying, I've got no idea about property. I need to know how much I can borrow, what all the costs and fees are, what is the maximum mortgage, and so forth. So we've got a process that I've designed over the last 20 years that basically reverse calculates all of that for somebody. So we normally spend an hour and a half on the phone, look at income, outgoings, liabilities, all that sort of stuff. Have a look at what deposits are potentially available, and then I map that forward to a potential purchase. And this is what I was saying to you about, do you just go 4 times salary equals, or do you actually find the perfect purchase price, which is the balance between a beautiful home and also having a balanced lifestyle? So we reverse calculate all that stuff, £97. But then we do unlimited reviews afterwards, because it might be that I speak to 𝑆i𝑎𝑚 and go, here's your initial stage one, and this is where you can buy up to £1 million. But you may go, well, I'm going to have an inheritance, a windfall from work, blah, 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 and all these changes are happening. I'll do unlimited reviews for 𝑆i𝑎𝑚 until we get to the point of, I found a property, offers accepted, now let's move forward. That's when we move to stage two. Stage two, we do find the mortgage specific for the client. So I've got no loyalty to any bank or building society. It is whatever is best for the client specifically. Get a degree, get it submitted, instruct solicitors, valuers, mortgage companies, work with accountants, and do the full processing. Depends on what type of clients I'm working with. I try and standardize my fees, so it's normally £297 unless it's an extremely complicated case or potentially an expat case, so we charge a slightly higher fee. Hopefully that answers the question. But the stage two, we only charge on production of a mortgage offer. So we'll do all that work, make sure we get mortgage offer for you, and then we only charge that fee. So deliver first before you charge.
Cool.
Thanks, Alex. You pay the landlord. Okay, yeah.
Hello on YouTube has said, is it best to invest in property after stamp duty has ended along with furlough?
Oh, okay. I think I get the question. There's a difference. If you're talking about buying a residential property, I don't class that as investing. I'm buying a house. This is for me and my family. As long as I pay my mortgage, I'm secure in my house. I know Simon's got a slightly different view with regards to renting. If you're talking about investing in properties as in I want to build a portfolio, then you're going to pay the 3% stamp duty on top of any additional stamp duty that needs to be paid traditionally anyway. So furlough, I don't think is going to have any bearing on it, as long as one of the applicants has enough to justify the mortgage or the minimum income requirements. You should be fine. Stamp duty, you're going to have to pay the traditional stamp duty, whichever portion it is, plus additional 3% because it's an investment property. So I'll try to answer both for you.
Yeah. Cool. 𝗵𝗶𝗶𝗶 on YouTube said, is it just me or is social media drowning in property gurus at the moment? It's almost as if there is more money teaching how to be a millionaire with lease options, service accommodation than doing. It's the same. Yeah, Rob, it's the same in every niche, whether it's trading, property, business, it's the same. Yeah. Just, yeah.
No comments on that. I'd say just be careful with the property gurus, because you've got a lot of people who call themselves property gurus or mortgage advisors that specialize in self-employed and stuff like that. They haven't got a clue. A lot of them haven't. They're just normal salary people. No disrespect to the good ones out there. Just do your due diligence on anybody. And I don't talk about myself as well. Do your due diligence on me before you use someone like myself. The easiest way I say is go have a look at the reviews and see how historic the reviews are and if they are consistent. So yeah, just be careful of guys who claim to be people that they're not.
Yeah. Alex then said property and crypto all over social media. Yeah, just watch crypto gurus pop out the woodwork now. Yeah. I see it with trading, and then what happens is that when crypto goes sideways or down a bit, then they'll disappear or turn into trading gurus. 𝗵𝗃𝗃𝗀𝗃𝗃𝗀, fake guru pyramid schemes that really grind my gears. Oh man, tell me about it. Cash FX is the biggest scam on the planet. In the trading world, yeah, I can scroll through my Facebook feed and I see a whole bunch of idiots going, hey, join Cash FX. And I'm like, they have no idea what they're joining and they're roping people into pyramid schemes. Yeah, grinds my gears as well. DIY Funnel Builders said, what do you think on property prices over the coming years with all that's going on? Where's your mystic Meg crystal ball, Justin?
Okay, so first of all, I don't have a crystal ball, so this is personal opinion. Personal opinion. People say, oh, they're going to be a property price crash. There is a possibility. You know, the only thing that scares me is people coming out of furlough, lockdown, all this sort of stuff. Is the self-employed people, businesses like myself, like I am, or any micro limited company business, where they've been looking after people under furlough, and no disrespect to that, I think it's a very good thing. They haven't necessarily looked after the limited companies or micro limited companies. So my fear is some of these companies may not be around once furlough ends, which means that a lot of people will become unemployed. So could that have an impact on property prices? Maybe. If you're saying long term, my personal opinion is all the money that's gone into the system has to end up somewhere. So it's potentially going to go back into property, and it's potentially going to go back into stocks and shares and companies and stuff like that. But if you look back on history, you've always got these boom busts, and then it comes back, bust, and back again. So I think my view on residential properties has always been, this is my house, it's not an investment. I'm actually in the process of selling and moving myself now. So we've stretched ourselves a small little bit. This is future-proofing for my parents and stuff, again, Joe's parents and that, is just to have an extra room on the front of the house, turn into a mini annex, which means we can work from home, run the other business from home, have parents living with us. But to me, my house is my house. If you're looking at investing in properties, pick your time very carefully or know what you're doing before you start. Property prices, I think, will ultimately bounce back. We bought in 2007. So basically I started the business 2007, bought a house, and Joe went back to full-time uni at the start of the last credit crunch, and people thought I was absolutely nuts. And I said, well, we took a 5-year fixed rate knowing Joe was going to be out of work for 5 years. I was starting on my business, probably couldn't remortgage at that time either, and the chances were the property prices were going to drop at the same time. But we took it as a 5-year decision. We're living in the house, I could afford the mortgage, and buttoned down for 5 years. After 5 years, things will eventually bounce back at some point. By the time it did, Joe's finished university and we sold and moved and made a profit at that point. So if you're looking to buy and flip properties, be careful when you do it. If you're buying a residential, you just stay until the property prices bounce back. The only time you'll lose money on a residential property is when you sell it. If you don't need to sell it, you're not losing any money. It's not worth a penny until you sell it. Investment property is slightly different.
So let's take an interlude here. There are more questions which we will come through to. Who are you, Justin? You're like, why are you in this country? No. Okay. Talk to us from, how did you move from South Africa to here? What were you doing back there? What made you come here first?
Right. Sorry, first of all, they kicked me out of South Africa, exported me and didn't want me back. No, born and raised in South Africa to English parents. So they basically were early 20s, migrated over to South Africa, set up businesses and started living.
Oh shit, you're English?
Yes.
Are you shitting me?
No, I'm not. English by heritage, born and raised in South Africa.
All these years I've known you, you're actually English. I've always known you as South African Justin.
There we go. So born and raised over there. Unfortunately, my mom passed at age 50. I was 21 years old, living at home with a stepdad that just wasn't. So there's a lot of friction, so I had to leave the country pretty quickly. There was no other options. So I basically packed my bags, 50 quid in the pocket, and ended up in the UK. My dad had already, my real dad had already moved back many years prior to that, so I stayed with him for 6 months. He then kicked me out and said, go sort yourself out, which in a way was probably the best thing he could have done. So I bought my first flat at 22 and basically just started working from there. So what
job were you doing?
Started in car rental, albeit, and this is the kicker, is my stepdad was an insurance and pension broker. So I've actually been in finance since 7, 8 years old. So I used to go and work in his office. I actually designed his, went from paper-based to Excel spreadsheets, Word document type stuff. So I actually transformed his business from old paper-based up onto electronic. It was one of my first jobs, was working in his business. So I've been around financial services since day one, but came over here, helped my dad set up his next business over here, which was in printing, so lithographic printing. That for me was probably one of the most, looking back, probably one of the most important lessons I've ever learned. So it literally was blank piece of paper. How do we design this new printing company? Go out, source materials, set up the business, get clients in, run the business, invoice, cash flow, the whole 9 yards. So it was a real grassroots experience of how to set up a successful business, which he sold ultimately, and then back and retired in South Africa. So that was my first true experience of setting up a business and selling it. I didn't want to be in printing, not my thing. Always been into finance and numbers and that. So I went over to the bank early 2000s, got my qualifications as a mortgage broker, and basically I've been in mortgages ever since. Never wanted to venture off into pensions, investments, stuff like that.
Nice.
It was always, I wanted to be a master of what I did. So I was bank for 2 years, went to an independent company, which I worked for 5 years. So I was one of the 4 people that set up the specialist division working with financially vulnerable clients. So we worked for 15 years with one of the largest debt-advised charities in the UK, helping rehabilitate people with financial difficulties. So that's why when I say I'm not going to max you out of lending, I try to find the balance between lifestyle and, a beautiful home. They started pushing me into the dodgy business. It's like, you want to do self-cert this, hairdresser on 150 grand a year, buying £1 million house, blah, 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 self-cert. I was not interested. So they called me up the first time and threatened me with my job and said, if you don't start doing this, you're going to lose your job. And I said, not interested. Called me the second time, instant resignation on the table. I walked out, and that was October 2007 when I set up JF. And so I've basically been trading successfully ever since. And there is only one overriding principle in the business, and that is honest advice every time. If it's not right for somebody, don't do it. It doesn't, I don't get paid for saying don't do it. I just believe that karma will eventually work its way back to me. And so far I've ridden out 2 crises, and thankfully it's still trading. So
you're bulletproof.
It's just the right morals and ethics. I'm not yes, I make money, and yes, I've got a great lifestyle for working hard and doing what to do, but you do it the right way. There's ways to do business, and it's the right way. So that's my little history.
And what do you do for fun?
Play golf, snowboard, rock climb, mountain bike, run the dogs, paddleboard, free dive, scuba dive, travel the world.
Yeah.
And kick 𝑆IAM's ass at poker.
Oh, screw you. No, you don't. Yeah. Do you still get your dogs to pull you on your bike?
No.
Justin has 2 crazy dogs.
Yeah, we've got a Saluki, and we've got a Whippet cross staff. So it's like Tilly's like a Whippet on steroids. But yeah, we train both of them to run alongside us in the mountain bike. So we'll be cruising down the road with them running alongside us. But Stan's been clocked at 38 mile an hour already. So, and
don't they pull the bike whilst you're on it?
They're running alongside us. They can. When we first get going, they generally pull. Once we're up to speed, we take the pressure off so they can run freely next to us, and we next to us there. But yeah, scary stuff.
Jesus.
Yeah.
I just can't wait to get RT ski going again. That was really fun. Please. Not last year, but yeah.
I was looking forward to that last year, but unfortunately it didn't happen. That's crazy. Yeah.
Cool. Okay, last couple of questions, then we'll have to call it a day because it's been an hour. So Tom has said, appreciating banks have their own max salary multipliers. I see this range generally from 3 to 5 times salary. What's your view on the multiplier of their someone should aim for max? Is 5, or do you think it's exact? I think we've covered this already. You said roughly 3 to 4.
It's the sweet spot's probably 3.7 to 4.2. But everybody's going to have their own sweet spot. So what I tend to do is I'll give you the max, and then I'll try and get you onto the cusp of green to amber lending. And generally, most people, I'd say 90% of my clients fall exactly on that line. So 3.7 to probably 4 is probably the absolute sweet spot. But each person's unique. Depends on what your next 2, 3, 4, 5 years in work business is going to be.
Yeah. And last question. Fame has asked, I'd love to buy some land and build a dream home on it in the future, but I'd also use it for business, rent for retreats, etc. How would that affect a personal mortgage, if at all? And it's not a new question at all, mate. It's a great question.
It is a very, very good question. If you buy it as your residential, straight residential, self-build or something like that, so that's pretty easy. If you're then going to convert it into retreats and that, then you're starting to go towards more the commercial side of things. So we probably need to explore the options. Can I buy it when you're looking to convert it into retreat, and then see if and when we actually need to migrate it over to maybe a commercial loan. There is some lenders will allow you to potentially buy a house and have maybe a room at the back of the house that you can rent out as like holiday lets, Airbnb and stuff like that. So I think the industry is starting to realize that a lot of people are renting the odd room out, and then they're having to embrace it, opposed to that. So if you're actually talking about multiple capitals on your land and that, I think you might be going down the route of commercial.
Yeah. And do you get better rates for self-build mortgages?
It's courses for courses. The rates always go down to your loan to value and the risk. So if you say it's price per risk, with self-builds, you'll probably pay a fraction more because you're effectively saying, lend me on a piece of land, then it's lent me on a piece of land with a foundation, then it's with walls, then a roof, and then now we complete it. So it's slightly different lending. So what you tend to do is you'll do the self-build mortgage first, and then your exit strategy is onto a more traditional mortgage once the property's been built.
Okay. And two really quick fire questions, then we got to call it a day here. Fame has said, does eco-friendly help you get better rates or any help?
No idea. I've not seen anything along those lines.
Fair enough. And Alex said, quick one, how many properties do you need to be classed as a professional landlord?
You need to have owned a property for at least 6 months in some cases. So 6 to 12 months, one property that's been let out and you can prove that you've got rental income coming in is some of them.
Awesome. Sorry for cutting it short here. I've just realized I've got another meeting I've got to get to. Justin, thank you so much for today. Where can we find you?
Website's probably my easiest one. So Justin at 𝗃𝐹�financial.co.uk.
So wait, what's your website called?
Justin at. Whoa, sorry, that's my email. 𝗃𝐹�financial.co.uk.
So 𝗃𝐹Financial.co.uk. So 𝗃𝐹Financial.co.uk, everyone. Please head over. Justin, where's your face? Come on, we need your face on your own website.
Yeah.
Oh man, there should at least be a video of you going, hey, I'm Justin.
Okay, I'll update it for you.
But yeah, 𝗃𝐹Financial.co.uk. Find Justin there. And yeah, just an all-round jolly good bloke. There's your face. So, right. Cheers, mate. Much appreciated.
Thanks, guys. Hopefully,
and I'll see you all soon.
Yeah. Have a good one. Cheers, guys. All the best. Cheers.